Have you ever wondered how a simple question can lead you down a rabbit hole of fascinating information? Let me tell you a story about a man who found himself in just that situation. Once upon a time, there was a man named Jack who had always been interested in cryptocurrencies. One day, he stumbled upon an article that asked the question, what is Bitcoin? Without a second thought, Jack began his journey to understand the world of cryptocurrencies. As he delved deeper into the topic, Jack discovered that Bitcoin was more than just a digital currency. It was a decentralized, peer-to-peer network that allowed people to send times and receive money without the need for a central authority. But the most interesting thing he found was that Bitcoin had its own ETFs, which were traded on stock in exchanges. One of these ETFs, Grayscale's Spot Bitcoin ETF, caught Jack's attention. He was fascinated by the fact that it was the first ever Bitcoin ETF in the US, and it accounted for 99.5% of its total AUM on the first trading day. Over time, however, Jack noticed something strange happening. The ETF's market share was steadily declining. As of March 12th, Grayscale's BTC ETF had fallen to 48.9% of the total 56.7 billion held between 10 US Bitcoin ETFs, according to Dune Analytics data. Jack was intrigued by this and decided to investigate further. He discovered that the decline in market share was due to consistent daily outflows from the ETF, which averaged $329 million per day last week. But what was most interesting was that the outflows were most significant within the first month of Bitcoin ETFs going live, with $7 billion leaving the fund in just over a month. However, as Jack dug deeper, he found that the outflows had begun to slow down, leading some analysts to suggest that they could be coming to an end. But in mid-February, bankruptcy courts allowed crypto lender Genesis to liquidate roughly $1.3 million worth of GBTC shares as part of efforts to reimburse investors, seeing outflows pick up again. In total, GBTC outflows had reached just over $11 billion per Farside Bitcoin ETF flow data. Jack was amazed by the fact that this ETF, which was initially designed for institutional investors, had become so popular that it was now being traded by individual investors. But what really caught Jack's attention was the fact that Grayscale's BTC ETF was initially a trust that allowed institutional investors to gain exposure to Bitcoin by locking up funds for at least 6 months. But after a court win over the Securities and Exchange Commission in August, and the regulators following approvals of other spot Bitcoin ETF applications, the trust was converted into an ETF. This allowed institutional investors to remove their capital from the fund for good, or simply shift their assets to Bitcoin ETFs with lower fees. And so Jack realized that in the decline in market share was not just due to outflows, but also to the growing popularity of Bitcoin ETFs with lower fees. But the story doesn't end there. Jack also discovered that growing net inflows into BlackRock's iShares Bitcoin ETF and the Fidelity Wise Origin Bitcoin funds had because for optimism, both of which had now generated a total of $16.9 billion worth of inflows since inception. As he continued to research, Jack realized that the growing inflows into the 9 newly launched ETFs were one of the fundamental driving factors behind the rapid appreciation and run the price of Bitcoin, which had just hit a new all-time high of $72,900 on March 11th. And with that, Jack had completed his journey down the rabbit hole of the world of cryptocurrencies. He had learned about the history of Bitcoin, the different types of TEFs, and the factors that influence their market share. And now he was ready to take the next step and invest in Bitcoin himself. With that said, thanks for watching, and until next time, I want the world leader.